we just had the Artery and Price Action Mentorship. What's the difference between the mentorship and the boot camp? Well, unlike the mentorship, this is a month-long boot camp for up to 20 people where I will be dedicating the entire month of January to share my understanding of the ICT concepts and how to use them on a day-to-day basis. Not only will I just be sharing my understanding of the ICT concepts, but once you're inside the private Discord, you'll have access to weekly Q&As, you'll have access to weekly homework reviews, you'll have access to at least 14 tape reading sessions, and you'll have access to the private Discord for up to 6 months after the boot camp ends. And at the end of the boot camp, each individual that's inside the boot camp will have an opportunity to schedule and conduct a 1-hour one-on-one coaching session with myself. Now, the boot camp will be broke down into 4 phases. Phase 1 will be a revamp of the Artery and Price Action educational material. Phase 2 will begin our tape reading sessions. And phase 3, we will move into developing strategies for those that are unable to develop their own strategy. I will work with you to come up with a strategy that fits your trader identity or your trading style. And phase 4 will be a combination of tape reading, Q&As, and we will start to schedule the one-on-one coaching sessions for everyone involved. Now, let's get to the meat and potatoes. How much does it cost? Well, the Artery and Price Action Boot Camp will go on sale beginning December 1st, 2024 for the price of $1,000. But if you are a current member of the Gang, you have a special discount code inside the Discord right now, which you can use up until December 25th to get 75% off that $1,000. So it will be $250 for any current Gang members if you use the code that's inside the Discord. Now, for everyone else, you have a discount code for 50% off that's good until December the 14th. And that discount code is SPIDER50. Again, for everyone that's not a member of the Spider Gang Discord already, your discount code is SPIDER50 and it's good for 50% off, and you can use that coupon code up until December the 14th. Now, it's first come, first serve. It's only available for up to 20 people. So once it's gone, it's gone. Take advantage of it today, and I hope to see you on the inside. Again, my name is Timothy Lee Rogers Sr., aka Aranya Grande. That's Big Spot. If you don't Hablo Espanol, y'all be safe out here in these trade streets, man. Gone. Man, y'all couldn't hear me. Hold on. We got to go back and do this over, man. Y'all couldn't hear me, man. We got to go back and do this over. I started like this. Nights like this, I wish that raindrops will fall. Hey, good evening, everybody. If this is your first time tuning in to Tim's Tidbits, please, man, look at that gap up. Oh my goodness. Look at that gap up on the NQ. We about to I just peeked over at the screen. You see this little green dot right there? That's the gap up. Who did we have some kind of earnings or something? Did we have some my computer restarted. Trying to get who do we have earnings for? Cause we got a mean gap up on the NQ. Oh, they going crazy. Okay. Man. I'm talking and I happened to peek over here and I saw this green dot right there. I'm like, wait a minute. That's a candle. That's a candle. We had from the end of day close to the open, that's a 90-point gap up. And from the 4 o'clock close to the open, it's a 78.5 gap up. Right. So it's a 90-point and a 78-point gap up. Huge gap up. Crazy to the upside. All right. Like I said, man, if this is first time tuning in to Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning in to Tim's Tidbits, I still want to say welcome and give you a nice hearty, well, thank you for always tuning in to Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Aranya Grande. Y'all know what it is. That big spot if you don't hablo español. And I don't have a picture up. Yes, I do. And you are in tune to the intraday price action recap. Y'all like my echo? Yes, man. The mentorship. I'm not the mentorship. The boot camp. I'm sorry. All right. The boot camp. We got 12 slots left. If anyone is interested in the boot camp, Tim, what is the boot camp? The boot camp is L'Art of Reading Price Action. Boot camp. It's a 30-day boot camp. Actually, January is 31 days. Whole month of January is going to be dedicated to the art of reading price action. 30-day boot camp. We got 12 slots left. It's only available to 20 people at the maximum. Right now, we have 12 slots remaining. Non-gang members, meaning if you're not a member of the gang right now, you're not paying the monthly subscription on the YouTube, 50% off until December the 14th at 11:59 p.m. with discount code SPYDER, SPYDER50. SPYDER 50 is the discount code to get 50% off. So it will be the retail of $500 and whatever tax they charge you on Argo's internet. Gang members, you have a 75% off code in the Discord located in the announcement section. You get 75% off, and that discount code is good until Christmas. After the 15th, for non-gang members, it will be $1,000 for the boot camp. After Christmas, for gang members, it will be $1,000 for the boot camp. If those 12 slots run out before the end of December or before any of those expiration dates on the coupon codes, that's it. No more slots. Apex is running a 80% off sale. 80% off all the evals. $125 for all the PA fees once you pass the eval. And $50 reset fees are going on right now for the next 5 days. So my 50% off discount code that's in the link, my 50% off link that's down there, if it takes you over there, it's going to take 80% off. Even though it's for 50% off, it's going to take 80% off because they're running an 80% off code. If you feel like you're ready to take advantage of a eval, prop firm, whatever you want to call it, I love it if you use my discount codes. Now, let's see who up in here. And let's get to it. Again, link pinned at the top of the chat if you want to check out the boot camp. Go check it out. Come hang out with your boy, man. Come hang out with your boy. This what, man, we trying to make sure everybody understand this stuff, man. we trying to make we gonna be doing something every single day for the whole month of January, unless it's a holiday or unless something come up in my family. Every single day, we're gonna be doing something every single day. Y'all come holler, come hang out with your boy, man. Come hang out with your boy. Here to learn and share up in here. We got Kim up in here. What's up, Kim? We got Rhonda Green up in here. What's up, Rhonda? We got Kashaya. We got Kashaya up in here. We got Tish up in here. We got Deborah up in here. Let me see if anybody over in the Discord. We got Marco hanging out in the Discord. We got Yolanda, aka Shauna, hanging out in the Discord. What's up, man? Y'all, let's get to it, man. My kids are going to the holiday social. They just left not too long ago. They came in and they exited quickly. I got to go get it. They not here, so they can't get it for me. Okay. Man. My stuff. Oh, here. None of my stuff. Oh, here. All right. I am back. For those in the gang who might have known, this is Woody won Defensive Player of the Year for his football team. I ain't trying to dox nobody. That's why I put that on there. Right. Defensive Player of the Year. This is his hardware. They gave it to him the day they went downtown. They went downtown and had another luncheon. They had another luncheon and they had another award ceremony to pass out the trophies. Cause at the dinner in the ceremony the other night, the trophies hadn't arrived yet. So they did another luncheon and another ceremony. But they, don't ask me how, misspelled his name. Tim Rodgers. How you gonna misspell your own player name? Tim Rodgers. He sent the text. He said, hey, who is this? He sent the text to us and he said, who is this? Tim Rodgers. But I was proud of him. He saw the vision early. Back in the summer, he said, Dad, one of my goals is to get Defensive Player of the Year. When he was in 10th grade, one of his goals, he said his goal in 10th grade was to dress out with the varsity. When he went to because he was on JV 9th grade, one of his goals in 10th grade was to dress with the varsity, right? So his 10th grade year, he lettered in his 10th grade year because when you got to play so many quarters. You got to play so many quarters to get your letter. Right, so he lettered because he was playing JV and varsity. So he dressed with the varsity. So that was his goal in the 10th grade, to dress with the varsity. Then his goal in the 11th grade was to get so many. I think his goal was to get like 30 tackles or something like that. That was his goal, to get 30 tackles. He got I think he got 32 tackles. Right, he got 32 tackles. His goal was to get 30 tackles. In 11th grade, he got 32 tackles. And then his goal for his senior year was to double his tackles and make Defensive Player of the Year. And I think he got 70-something tackles. I think he got 70-something tackles, and he made Defensive Player of the Year. So he saw the vision early, man. He saw the vision early. And, hey, man, that's my proud dad moment. I appreciate y'all for sticking through that proud dad moment. Now that we've separated the wheat from the tare, let's go ahead and get into the intra-day price. I appreciate that. Everybody giving their congratulations. I appreciate that, man. Shout out my son, Timothy Lee Rogers Jr. All right, man, let's get to it, y'all. Today, December the 11th. As we see, y'all can see I got some little markings on the chart, markings on the chart, some markings on the chart, markings on the chart. All right. And even though today was an extremely difficult, high resistance day, we can see that even through it all, price is still pricing, right? You see, we came here, took out our sell side. We went there, took out that buy side. So we were anticipating price to pull back into the range, right? You see what I have marked out here, right? This right here, right? Can anybody tell me why I have this marked out right here? We're getting straight into the class participation. All right. Let me blow up the font so y'all can see everything that's on the screen. You know, for those that be like, Tim, I can't see what that stuff say. Let's blow up the font so y'all can see everything that's on the screen. I'm listening and looking. Ain't nobody gonna tell me. Why do I have this marked out right here? Right? Why do I have that marked out right there? I know you see what it is, but why? Why do I have that marked out? Two different reasons. Two different reasons. Two different reasons. Why do I have that marked out? What makes it that? I'm not asking you what it is. We see it's that. We know that it's that. Why? Why do I have it marked out? Why? In the discount leg of leg, and you may want to use it. In the discount of leg, and you may want to use it. Okay. All right. That's one reason. It's in the discount. It sounds like Deborah's grandbaby was typing it out, but yes, it's in the discount. Right? Because it's a higher time frame PDA rate that you want to see some blood. It's in the discount. Yep. Now, what's the other reason why? Look at what it is. Look at what it is. Right? And look at where it is. Right? What is it and where is it? Right. Somebody come in the Discord and talk. I'm getting tired of y'all typing. It's taking too long. Somebody come in the Discord and talk. Who in the Discord? Marco, Yolanda.
A balanced price range?
Nope, not a balanced price range. It's they said it's an inversion fair value gap that's in the discount. So it's in the discount, right? So, all right, that's one reason why I marked it out. Now, it's an inversion fair value gap. Where is this inversion fair value gap? Where does it reside? We said it's in a discount, but where does it reside? Where is that inversion fair value gap? Speak, Marco. Speak to me. Where's this inversion fair value gap? Where is it?
In another inversion fair value gap?
It's inside. It's inside something, right? You're getting warmer. You're getting warmer. What is it inside? What is it inside? Where does it reside? What is it inside?
I don't know.
Not near, but not you getting warm, Kashaya. It's not near. You ain't lost. You right where you need to be. Don't say I'm lost. It's not near. Right? It's not near the breaker. Where is it? Where does it reside? What did we say about breakers? Yes, it's in the leg of the breaker. And anytime you have a breaker with an imbalance inside the breaker leg, you hope that price will come back to that inversion fair value gap inside your breaker leg right there. So that's why this inversion fair value gap is on my radar as a potential anticipatory reactionary point. Right? I ain't actually wrong. I said, give me 2 reasons why I marked it out. In the discount, and it's in the breaker leg. 2 reasons why I marked it out. Don't try to put it on me. Stacks on stacks on stacks on stacks. Blocks on blocks on blocks on blocks. Yeah, man. Y'all give it up for Marco for having the courage to pull up and try to come through with the hard-hitting answers. Appreciate you.
What's that? So what actually signifies the breaker? What candle?
The high, the lower low, and then the high. The highest up close candle or candles of that range there, that's your breaker there.
Okay. All right.
You got a high,
I'm thinking,
low,
I'm thinking
higher,
too small. I was just thinking within that actual price leg, not the whole screen. You understand?
You got a breaker here. You got a breaker here. You got this is inside something, so I don't want to pick that out. But technically, you could look for a breaker in here, but that's inside consolidation. Some people might try to find one in here, but that's inside consolidation. But when you think about breakers, you think about the entire move, right? So this move here, right, can be broke down into 1, 2, 3 different stages, right? But this is the entire move, right? So when you go from that high to that low back up there, right, this is your breaker for this entire move, right? This is a breaker for this piece of the move right there, right? It's a breaker there too. So you're looking at the whole move, right? You got, that's a breaker there, right? That's a breaker there. Right? You're looking at the whole move. What makes it a breaker? Smart money manipulates price to some liquidity, then it manipulates price to some liquidity, then it pulls back into the range, right? So you're looking at why is price moving. You see what I'm saying?
Okay.
And then if you got an imbalance inside the breaker leg, then you want to see price dig deeper down, especially if the breaker is residing up in a premium. You definitely want to see price come down to a discount, and a key place to look would be at the imbalance that's in that breaker leg that became an inversion fair value gap. Now, it doesn't have to, because if price is exceedingly bullish, all of this right here is a balanced price range, so price can just stop at the top of it and keep going right at the breaker, right, if it wanted to. But that's why we wait for price to get to our anticipatory reactionary points and then give us a sign that it want to continue on. We don't just jump in as soon as it hit it, right? We look for that confirmation. Okay, everybody tracking?
Yes, sir. Thank you.
All right, all right, all right. Now, as we see, price did, give us a retracement back. We came back down into the range, right? We got a prior week's high right there. That prior week's high is also that's just a prior week's high, right? Tim, why are you marking out a prior week's high? Because when you're looking at days and weeks and all of that right there, right? Like 3 weeks back, 3 days back, right? Those prior highs and lows are of some type of significance, right? So that's a prior week's high right there. On the daily chart right here, we got a prior, that's a prior day high also, right? Of course, it's a week, so it's going to be a day, right? That's the prior week's high, right? And this is a prior day's high, right? So we got 1, 2, 3 days back, right? 3 days back there. That just happened to coincide with that prior week's high. I didn't mark that one there because I had already had a prior week's high that's close in proximity to it. So I said, hey, I'm just going to mark out the prior day's high. All right. Then, so those are, and then that's our new week opening gap, the purple thing. The purple thing is our new new week opening gap from Monday, right? Our new day opening gap from today is this little area. It looks like a line, but it's really small. That's our new day opening gap from today's price action. See, it looked really small. Look like a little, I don't know if y'all can see it when I squeeze the chart back up. Okay, so now, price, these are 15-minute candles right here. Price opened up over here, right there at 6 o'clock. It opened up there at 21,756 3/4, right? And then we did nothing but pretty much consolidate. We just consolidated all throughout the Sydney and Asian. Sydney and Asian consolidated all throughout that. And then as we came into the London, right, price went above. Did it go above? It didn't even go above. We set relative equal highs, right? Yep. So price went up and set relative equal highs. It pushed up above the midnight open, right? We did go above the midnight open, but we did not take buy side, right? Poked above midnight open here, right? But did not take the buy side, set relative equal highs. Then we broke down, taking out the sell side, giving us a Judas swing here, right? Between 315 and 330, right? Giving us a nice little Judas swing there. Then we traded back up just above midnight high one more time. And then price started to make a nice drop down, right? Then the news came out. The news, as like a lot of news does, clears both sides of the board, right? We pushed up, right? We pushed up here. Did we get above that little high right there? See if we got above that little high. Nope. We made relative, pushed up, made relative equal highs there. All right, so we pushed up, made relative equal highs there. Let me make these green because that's going to mess with my eyeballs. Green. Let's make it 2 points so that y'all can see that. Okay. And then come here. Right there. All right, so pushed up, made relative equal highs there off the news candle. Made relative equal highs, came down, swept out the buy side, and came all the way down to the high of the new week opening gap that I had marked, right? The reason why I had the new week opening gap mark and this new day opening gap mark is so that I can see how price trades throughout. What's this called that I'm marking out here? Who can tell me? What is that called? What I'm marking right here? Who can tell me what that is? What's that called? 75, 55, 75, and 49 even. Who can tell me? Who can tell me what that is right there? What I just marked out? Nobody? 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 Nobody can tell me what that is I just marked out? Nobody? Event horizon. Very good, Deborah. Or Deborah's grandbaby, whoever doing the typing. Very good. Right? I want to see how price reacts at event horizon. Okay? So y'all give it up for Deborah grandbaby for knowing how to type at such a young age. I think Deborah getting her answers from Sherwin. Shout out Sherwin for helping Deborah out with the answers. All right, so let's put that in the 4th grade so we can get some more detail about how it acted. All right, we're going to put that in the 4th grade real quick so we can look at that in more detail on the lower time frame. So as you see, we drop down to the high of the new week opening gap. The low on that candle right there is 648.75, and that's 1 tick below the high of the new week opening gap. So if you was trying to get in or out at the high of the new week opening gap, you got touched right there, right? Went 1 tick below it. Then we pulled back up into the SIBI that was created on the news candle. Then we dropped down, taking out the sell side, dropping below the new week opening gap. Then the body of the candle respecting the new week opening gap, right? Body of the candle respecting the new week opening gap, closing at 649.50, 2 ticks above the new week opening gap. The next candle dropped down below the new week opening gap one more time, right? Left the buy sell side, right? And then displaced up, right? Taking out this high, right? Giving us we rejected this low there, and then we came here, and then we expanded back up to that high right there, right? Remember, whenever you reject a low, there's a possibility of reaching back to the high that sent you there. Doesn't mean you're going to get there every time, but it's a possibility, right? That's what your thinking should be. We rejected this low, so it's a possibility to go to the high that sent us there, right? And we went right back to the high that sent us there, taking out the relative equal highs right here. Boop, took out the relative equal highs, pulled back down into the bullish order block, right? Pulled back down to that prior week's high right there, right? This candle here stopped at it on a dime right there, pulled back down to the prior week's high. Then we went back up, creating an inversion fair value gap right there, right? We came back. This is all during the New York session, as you'll see, right? If we look, let me see, right here over to right here to right. Let's just go. This is all the way up until to right there. Right, this is right. This is the morning. This is the morning through lunch right here. And then this is lunch. This is lunch up until 4 o'clock, right? The close of day, 3:30, right there. All right. We're going to make that a different color. A color that you can actually see. Can y'all see that? Yes, y'all can see it. All right, y'all can see that. So we good there. I'll darken it up just a little bit, just in case y'all can't see it, but I'm pretty sure y'all can see that. Okay, so this is the morning through lunch, right? So this from 9:30 up until 1:30, right? Because lunch is from 12 to 1:30, right? 12 to 1:30. So this is the morning through lunch. Then this is the afternoon, right? We can do it like, we actually can do it like this right here. All right. So the morning, lunch, and then afternoon, right? As you can see, right, when you break it down and look at it, don't break it down and plead like James, right? When you break it down and look at it over the sense of the entire day, right? When you look at it over the sense of the entire day, you can see that in the morning, price engaged the sell side, right? Then it went up and engaged the buy side, right? Remember, we rejected this low, so you can have a draw toward that high. Then after taking out the sell side, right, price pulled back into the range to finish off the morning. Going into lunch, right? What is the signature? What is a signature? Somebody give me a signature of lunchtime. What can you anticipate? What is a lunchtime signature? Or what is lunchtime like kind of known for doing? All right? What is lunchtime known for doing? What is lunchtime known for doing? Somebody in the gang that's been here longer than Marco and Yolanda, pull up in the chat and talk to me. What is lunch known for doing? I don't want no vague terms. Reversal, consolidation or retrace. Reverse or retrace. No. Look at Yolanda pulling up with the somebody better give it up for Yolanda. Look at Yolanda pulling up in the Discord with the hard-hitting answer. Hard-hitting answer. Now, for bonus points, Yolanda, what time frame, and if those who can't see what Yolanda put in there, she said attack opposing liquidity of the morning session. Now, let's put for bonus points. What is the time frame of the liquidity that you're looking for price to most likely engage from that morning? Right? What's the time frame that you're looking for it to most likely engage when you're going into that lunchtime? Right? What time frame are you looking for to likely engage for extra credit? Yolanda done did the hard part for you, Deborah. Don't run out the Discord now. Come back and tell me. What is the time? Come through, Yolanda. What you got? Formed after you want the highs and lows to be formed after what time? Mama, I said 10:30. Very good, Yolanda's kid. I heard the kid say, "Mama." I said 10:30.
No, let me mute you, girl. Be quiet.
Yay! Very good. Very good. Beautiful. Good job. 10:30. Liquidity formed after 10:30, between 10:30 and 11:30. Once you get into, you're looking for that's the most probable. That's what you're looking. If it's clear liquidity formed after 10:30, right, and the market starts showing you that it wants to engage opposing liquidity during lunch, those from 10:30 on, those are the highs or lows you can be targeting, right? And if we look here at lunch, we come back up, right? We come up, get a nice pullback into the order block, right? Once we hit the order block, we go up and we take out what? That high right there. What time was that high made? That high was made at 11 a.m. Is that after 10:30? Yes, it is, right? So when you get here at like, just say 11:30, around 11:30-ish, 11:30 to like at the end of London. London closed at 11:30, right? When you get around here around 11:30, what you do, you look back, right? You look back, and the first high or low that you come to that was formed after 10:30, that would be your high probability target for a run on the morning's liquidity, right? So coming into that lunchtime, the sellers were in control. The sellers was in control. So coming into lunch, you can anticipate price running on buy stops. The buy stops that had formed after the first buy stops that you run to that was formed after 10:30 was right there. Price went up, traded back into the order block, pushed up, took out those buy stops. Once they took out the buy stops, we came down, took out the sell stops, right? Gave a small retracement back up here, small retracement back up. There's no imbalance there, but we did get a small retracement back up into the wick of the order block, right? We hit the wick of that mitigation block. We hit the body of this 3-candle breaker right there, and then price dropped down. Again, taking out the sell side, hit the high of the new week opening gap, retrace back up into the imbalance, right? And then drop down to finish out the delivery, offset the positions, and pull back up into the range, and then melt it off a little bit more, right? And then we had a nice gap up. Nice gap up. So that's the price action over the 15-minute chart. Since we went through it so quick, let's go and let's just put it on a 1 minute and squanch it up and see if we can see any type of reactions worth noting to the event horizon situation. Where is? Oh, there it is. Okay, so let's put our new week opening gap on there. That's our new week opening gap, and then that was pointing out our event horizon. Right? If you're wondering why I got the event horizon broke down into quads, it's because any PD array can be broken down into quads. Can you refresh my memory on what event horizon is? No. Event horizon is what Michael calls the 50% between new day opening gaps and new week opening gaps. It's the 50%. Remember I said I don't know why he got so many names for 50%. Event Horizon is 50% halfway between new day and new week opening gaps. Equilibrium is 50% of a range. Consequent encroachment is the 50% of an imbalance. Mean threshold is the 50% of a reference point, a block. Right? That's why I tell people, I'll be like, don't get so we're not taking a Scantron test. Who remember Scantron test? If you Gen X, I think we Generation X, you know about a Scantron test. You're not taking Scantron tests. Ain't the algorithm, I mean, your bank account or your brokerage ain't gonna penalize you for calling consequent encroachment when it's mean threshold. You know what I'm saying? You're not gonna get penalized. Just remember, it's halfway. If you can't remember all of the names, just say 50%. Either say halfway or 50%. If you can't remember the names, halfway, 50%. Right? Yep. Do you have a number 2 pencil? Take your pick. Take your freaking pick. Take your pick. Keep them on deck. I keep them on deck. Yeah, hear me. I keep them on deck. You will not get me slipping when you break off the lead. The kids will never know what it is to go. See, they be having these little things like this right here. They'll never know what it is to go up to the side of a teacher's desk, put your pencil in this little thing that's screwed to the cabinet. You put it in there, and then you grab a handle and you twist it to sharpen your pencil. They ain't gonna know nothing about that. All right. So just remember 50%. 50%. You ain't got to try to remember the names. So 50% between a new day opening gap, in this case, and a new week opening gap. If you run a Fibonacci tool from the low of the higher gap and the high of the lower gap, right? 50% in between those right there. That's your event horizon right there. That's a PD array, just like consequent encroachment, just like mean threshold. Now, I got it broken down into quadrants because just like any other PD array, you can break it down in quadrants, right? So you see, as we come down into here, right, price hangs out at the quarter, right? Then price drops down to event horizon, right? Price goes back up to the quarter. Then it drops all the way down to the low. Then it comes back and hangs out around the 3/4, right? Between the 3/4 and the half, right? Then price drops down, taking out the sell side, right? Pushes up to the half, pushes up to the quarter, takes out the buy side, pulls back down to the 3/4, right? Pushes back up close to the quarter, back down to, you see how it's like just flirting around these little areas, right? If you never knew anything about event horizon, right, this would not be on your radar to be able to see how price is respecting these levels, right? You'll never be able to see how price is, even on, this is a 1 minute chart, right? Let's look at it on a 15-minute chart. That was a 1 minute chart, right? Looking at it on a 15-minute chart, right, it's even more evident how price was respecting those levels, right? It's even more evident how price was respecting those levels, right? Look at the bodies of these candles, right? Look at the bodies of these candles, how it's respecting these levels, right? Right? Hanging out around these levels, right? Look at the bodies of the candles. It's evident how it's respecting those levels. Right, on the 60-minute, right? Look at the 60-minute, right? Price came down, right? And then where did it hang out most time? In between the upper quarter and the lower quarter. That's where price spent most of the time, right there, right? In between the upper quarter and the lower quarter, right? What's in between the upper quarter and the lower quarter, right? What do we say this was, right? So if you got the upper quarter and the lower quarter, right? What's right there in the middle, right? What is that? Not the name,
Halfway.
but halfway. Yeah, halfway. And what happens at halfway between
most of the time consolidation?
And so what is price doing right here?
Generating liquidity.
But what do we call that? It's doing what?
Consolidating.
Consolidating. Shout out Lump pulling up with the hard hitting answer. It's oh my goodness, this stuff really does work. It really does. Now, if you had no clue about Event Horizon, right? If you had no clue about Event Horizon, you would not be privy to know that this is a halfway point in between 21,755 and 3/4 and 21,649 even. This 21,702 and 50 is the halfway point. So right at the halfway point, price is just kind of hanging out right there, consolidating. Right there, hanging out, consolidating. Where? At Event Horizon. Where? At the 50% mark. Where? At equilibrium. Right? Equilibrium of what, Tim? Right? We got a whole range right here. Right? We got a whole, look at this. We got a whole range right there. CE. I just fainted. This stuff really works. This stuff really freaking works. Hey, man, if y'all ain't decided to pull up to the boot camp already, what is you doing, man? If you really want to understand how to read price, you can go back, look at the Art of Reading Price Action playlist on my channel. I think that's the most, to the date, I think that's the most concise way of me sharing the way I understand price, right? I got other stuff on there. I got the ICT lingo. I got the ICT price action. I got all the ICT playlists. Those are good, right? I got the trade and futures for beginners. That's good. But the Art of Reading Price Action, I think that's the most concise and most to the point, the clearest way I've ever broke it down, right? So you can go through that at your own time for absolutely free and study it and figure out how to read price action, right? But if you want that helping hand, we're going to go through all the material in all new different videos that's only going to be accessible by the bootcamp members. We're going to redo the educational part. We're going to do price tape reading. We're going to work out entry models for those who can't develop or can't see their own entry models. And then after the boot camp is over, everybody that's in there is going to get individual one-on-ones with myself, a one-on-one coaching call with myself to fine-tune any other lingering questions that you might have. And then if you're not a part of the gang already, you get to hang out with us in the Discord for 6 months after the boot camp ends. So that's going to be what? July. It's January, February, March, April, May, June, July. So up until the end of July, right? Up until the end of July, you can hang out with us and still be a part of the family, because we're just not going to flick you out there to the wolves, right? Link is pinned to the top of the chat. Apex is having an 80% off sale for the next 5 days. Link is the second link in the description. Does anybody have anything for me before we call it a night?
Hey Tim, I did have a question.
Okay, what's up, Kushaya?
On the ES, on the hourly, I was wondering if you could like walk me through it, because I was kind of confused today.
Do I need my crystal ball?
No.
I don't need my. You sure I don't need my crystal ball?
That's up to you.
ES on the hourly.
Okay. So the range that I had, like the dealing range that I had highlighted, was the low from December 10th, Tuesday, December 10th. Yeah, that.
This low right here? Okay.
Yeah. To the high, basically to that, like to the top there on the right.
Here?
Yeah.
Okay.
So when I looked at it like this, I kind of seen surd, if that makes sense. So like I see the consolidation, the expansion, the like essentially I'm thinking that it was supposed to retrace today, and
You talk about
I
here
see,
like this?
yeah, yeah,
Okay.
yeah. And then because it's in like I don't know how to explain it, but essentially, like the first fair value gap, I considered that a breakaway fair value gap. So I was assuming that price wasn't, yeah, and it's in discount, but I was assuming that price wouldn't want to come back down there. So
Talk
I
about
can,
this one?
yeah, exactly.
Okay.
So then I was thinking to move my dealing range higher because like that area would be a BPR, or
Mm-hmm.
was I confused there? So because I moved the bottom leg to the, let's see, the 9 a.m. candle from Wednesday. Yeah, there.
Okay.
So I moved it. So then it essentially just chopped and then it took out the low. So I was just confused as to why it did that, or my bias was wrong. Yeah. I just wanted to know like where I went wrong with my analysis.
Nowhere. You
Okay.
didn't go wrong with your analysis nowhere. It just now, one thing I can say
Mm.
that you only want to, how can I put it? I'm trying to think of a good way to put it. Because we're gonna go back and remember what you said about this fair value gap right here. You said you was looking for that to be what?
A breakaway.
Okay, a breakaway gap,
Yeah.
right? Now, how long, let's go to replay, come here, right? What do we always say about price when it's um, leaving signatures, right? You want those signatures you want those PD arrays, should I say, when price is leaving signatures and giving you PD arrays, you want them PD arrays to hold until price does what? Finishes what?
Model.
Some type of business, right?
Okay.
Until price finishes some type of business, right? So we come here, we create a fair value gap with the expansion candle. So we're anticipating it to be a breakaway gap, right? So then price doesn't come back down to it, right? So now we know it's a breakaway gap, right? Because it formed another fair value gap. Okay, so now we looking at is as a breakaway gap. So if price right here, as it created that fair value gap, if price started to pull back here, this is when you don't want to see that touched. Why? Because price has not engaged with any type of liquidity yet. It hasn't handled any business to the upside, right? It created the breakaway gap, but it hasn't come and engaged, because when it created the breakaway gap, it had already taken out two highs, right? So since it's taken out two highs here, right? Now that it create the breakaway gap, now that it's saying yes, a breakaway gap, if we come up here, like for example, this high right here, right? That high right there, that high right there, that high right there, and then this is your terminus, because that's the end of the run, right? So if you ever seen when I be looking at, I be studying, we be watching price, and I say, okay, I want to get long off of this, but if we take out that buy side, I don't want long right there no more. That's why. Because it's done something to the upside now. So now but you have to prove that you don't want to dig into this no more. You see what I'm saying? Because anytime you take liquidity, there's a possibility for a reversal. You see what I'm saying? So you only want to hold this to be a breakaway gap until it has done something, once it does something up here and then price starts coming back, now it has to prove that it doesn't want to go there no more. You understand what I'm saying? Do it make sense?
Yeah. So how would it prove it? Like if it chopped like consolidated above it and then it moved away like higher?
If it came here, right? If it came here and
Mhm.
then just say we start chopping here, right? Then you would need it to
Move
like
higher. Or break.
build a structure. Like come here,
Okay.
right? Sweep liquidity, come up, and then start to inform. You see what I'm saying? Like take out a low, take out a high, and then start forming bullish structure. You see what I'm saying? You're looking for your bullish signatures in like any other anticipatory reactionary point. It come down here, you want it to give you a reason to keep coming higher. But if it come down here and just start chopping, you just waiting, right? And then if you take out sell side, then take out buy side, and then respect this here, now you like, okay, now it don't want to go there. I can start looking for reasons to go long.
Okay, that makes sense.
You know what I'm saying? But you didn't go wrong, because looking at this, you got like if you're looking for price to be bullish, right?
Yeah.
And you're looking at this is a balanced price range. If we come back down into the discount, right? You're not wrong for anticipating price to go back up, right? You're not even wrong for looking at the like moving it to your dealing range.
Yeah, that's
to
what I was
here.
gonna ask, if that was like doing too much to move it.
You're not even wrong for looking for it here, because if you look for it there, the only thing you're doing is looking for the reaction right here at this imbalance. Once you get to this discount imbalance, is it showing me that it want to go up? No, it's not showing me. It's showing me it still want to go down. Who cares where you mark your range, right? Because when you get to your range, you say, okay, here's my spot I want to try to buy off of. How far can it go? I got an imbalance there. I got sell side here. I got internal sell side there. This is all the places it could go to once it get here. So there's nothing wrong with just watching this area, right? You're just looking for price to be more bullish than it was. You see what I'm saying?
Yeah, I do. Thank you. So like you said, I have to be mindful if it takes out liquidity, then I have to wait to see if it wait for it to prove itself to be a BPR or a breakaway fair value gap.
Yes, because anytime you're looking at an expansion, right? Anytime you're looking at an expansion, you want to know where you are in price, right? So if we look to the left, right, this expansion is just a retracement for this move down. You see what I'm saying? So if you're in the mind frame of we've taken out buy side, taken out sell side, right now I'm waiting on a retracement to participate down. You see what I'm saying? So this expansion is just a retracement for this price leg here. So whenever you taking out liquidity, there's always a chance of a reversal. Okay, it's just the idea of who's on the right side and how much manipulating they're gonna do. That's why people can be wrong and still make money, right? People can be wrong and still make money, because as long as you don't overstay your welcome and you get in at the right time and you have a target that's feasible within what the algorithm is doing at that time, you can be slapped wrong and still make money, right? So you always want to be aware of where you are. So I got a consolidation and an expansion, right? So if I get a consolidation and an expansion, right, realistically, the best retracement for this consolidation expansion would be to come back to the order block. You see what I'm saying? Because we consolidated here and expanded. The order block is way down here. So the absolute best scenario would be for price to come all the way back down to the order block. Why? Because we got all of this buy side imbalance right here. So we would want price to come all the way down and reprice this whole offer sell side delivery all the way back to the order block, right? So that's the best case scenario, okay? And then since that's the best case scenario, when we thinking about it in the sense of we came down, we took out buy side, took out sell side, and we retracing back up, right? If we look over here, right, only thing we did was come below some internal sell side from all of this run over here, right? So it's like plenty room for price to keep going if it wanted to. You know what I'm saying? So if you like super bearish and you like, man, we way up here treetop tall, the market gonna keep going down, you're looking for a reason to sell up here. You see what I'm saying? So that's why you always want to be aware of where are you in price at all times, and you just look. That's why I always say look for the signatures of what price going to do, because nobody knows what's coming next with this hard right edge. The hard right edge is the scariest place in the world, right? But what we can do by the stuff that we've been taught is when you see price doing something, right, we can look for the signatures, right? We can look for the, and then you see right here, it's like price is slowly making its way back down toward this order block right there, right? I said the best case scenario would be to come all the way back to the order block, right? So we're slowly making our way down there, and until price shows me that, hey, I'm done, right? I'm done like going down here, right? I wouldn't try to fight it. You see what I'm saying? I wouldn't try to fight it and try to call the bottom and look, because look at how price is moving, right? Price, as we came over here, right? We did a whole bunch of doing, select doing, right? Doing, and then we dropped down here, quick melt off, drop down, right? Pull it back into the range, drop down, right? So price is dropping. It's dropping rapidly, right? So then all of a sudden we get this sharp retracement back up with no type of pullback at all, right? Whenever we see price moving like that right there, we know the algorithm is doing what? It's spooling, right? The algorithm is spooling, right? When the algorithm starts spooling, that spooling is a form of manipulation. You see what I'm saying? It's like a form of manipulation, right? So if it's like spooling like this right here, right? Now you can say, now you're looking like, okay, why did it need to get up here so fast just to go to that high, right? If it was so bullish, why didn't it just keep going there? You see what I'm saying? Because it's when the algorithm starts spooling, it ain't nothing you can do to stop it, right? It ain't nothing you can do to stop it. So you like, why didn't it come all the way there, right? It didn't come all the way there because this was just manipulation, right? It wasn't really ready to be bullish. It was just pushing price back up there, spooled price back up there, and then it started to come back down. It started to break down. And we got in here into the New York time. We started all that doing, messing around, and then this afternoon, what? Dropped off again, right? Dropped off again. So, and for me, looking at this right here, until price blows through this area there and gets back above here, right? You know what I'm saying? Get back up there and start showing me that it wants to go up, right? I would want to see it come on down, maybe even take that sell side, right? Maybe even take that sell side just based off what the price is doing, right? But since we got so much divergence between the NQ and the YM, it's like we have to allow for price to give us extra confirmation, right? Like you say, when it came here, right? You wasn't expecting it to go down inside there, right? Let's go and let's dig inside there and look at what could have tipped off, or what could have, you know what I'm saying, told you like, hey, it's just coming there to bounce, right?
Tim, before you drop down, I just want to ask a question about something that you said a few minutes ago. You said that this like price spooling higher is manipulation.
Yes.
And that's only a retrace to the downtrend on the left. Why is that a retrace, like for price to go down? Because I was considering that downtrend a retrace in a bit, like on the bigger picture, to go higher. Is that like
because when we would, because see, we've come up, right? We're coming up here, right? And we're up here, and we've taken out like all the buy side, right? We're up here at like all-time highs. We've taken out all the buy side. We're at all-time highs, right? We pull back down, and then we take out the buy side, right? And then we come down and take out the sell side, right? So at that point right here, right, we're looking at this as a smart money reversal, right? We're looking at that as a smart money reversal. Why? Because we have taken out the buy side
external
and then came down and taken out the sell side, right? So now we're looking at it as, okay, that this right there was a smart money reversal. Why is that? Right? It ain't just cause I feel like saying it, right? Whenever you get below the last area, excuse me, the last area of accumulation in the sense of a market maker sell model, right? And this one here, it ain't the prettiest, right? Because you got like this move here, right? But the only The only reason why it's not like as pretty as you would like is because this is offset accumulation, right? Because we took out sell side and went to buy side, right? You remember we have reaccumulation, then we have offset accumulation where you take out the lows before taking out the highs, right? So we got the offset accumulation there, and then we come back here and drop down below that area there, right? So this right here is your last area of accumulation, and then whenever you're in the market maker model and you take out liquidity and then you break below that last area of accumulation, now that's a sign that you're on the right side of a market maker sell model. Okay, and then how far can it go, right? It can go, like in this case right here, me looking at this area right there, like this right here, I'm looking at that as it came back here. This little breaker over here does its job to push back up to bring it back down to sweep under, like, you know what I'm saying, maybe this area there, maybe this area there. You know what I'm saying? Like, it can stop where it is and go back up, but just looking at the sense of a clean market maker model, right? You always want to look at like all the possibilities, right? So this right here, it depends on how you want to mark it. It's sloppy, but it looks like this looks like more of a starting place than right there. You see what I'm saying? Because you got accumulation over here and you got accumulation over there, right? This right here looks like something was ending. This right here looks like something was beginning. Right there, it looked like you're in the middle of something, right? Because we came here, went down, came back, came here, and went up, right? So this area looks like we're in the middle of a move. You see what I'm saying? And so that's why I say when you looking at it as, all right, we've come back down, right? Hit this area there, and now we're pushing back up to come. Even if we just came down and just swept that and went back up, right? It still don't matter to me, because why? In this case right here, when we came down here, right, we never came back to this area right there to give smart money an opportunity to short, right? Like if we look at it here, right, we came here, and this is getting to the reason of why I said this was a retracement, right? Come here, smart money reversal, low risk short, right? Now that we come here, we came there like that, and then we dropped down, right? We never came back to this area here to give smart money an opportunity to short here. You see what I'm saying? So once we come down here, now, once we come down there, now in the sense of what price has done, okay, this from here to there is your entire dealing range coming down here, right? That's your entire dealing range coming down there, okay? This dealing range can be broke down into these little price legs right here, right? You got 1, 2, 3 little price legs there. All right, so when you look at this first drop down here, right, when you look at this first, we dropped, just say we came here, right, we pushed up there like that, then we dropped down, then we pushed up there like that, then we dropped down, right? But in the sense of coming like here, we dropped there, we had a quick pop, we dropped, then we came there and we dropped. But in the sense of giving smart money an opportunity to come back to a premium to sell, that never happened in this area right there. So now you got internal liquidity there, internal liquidity there, internal liquidity there, and internal liquidity there inside this dealing range right there. As we were going down, right, we never took out any buy side going down this entire time, right? So we was just selling, right? So we've never had an opportunity to take out any buy side before coming back down. So when you see this move up like that right there, right, if price was using this as a balanced price range, right, this spooling right here should not have stopped there. It should have just went straight out the top, right? So since we never took out any buy side coming up for this move here, right? Now you're looking for your retracement opportunity, because when you came here and dropped down below the sell side, right? This was your first opportunity for retracement, but it never went up. You see what I'm saying? Because we come here, we drop, dog it. Right? We came here, that's our entire move, right? This right here coming back above that high would have put us back into a premium for that entire move right there, right? This right, even if you use that leg, coming back above that high would put us in a premium for this entire move right there. You see what I'm saying? From there to there, we never got the retracement, right? Even if you come down to the last leg of it, right? The retracement never got back to the premium. You see what I'm saying? It never got back to the premium. The only thing we got back to a premium on was this last leg right here, right? You came down, went back to a premium, and then took out the sell side. So that's why I said this move back up right there was just a retracement for this leg down, for anybody that was waiting on a short for here, right? Because we never came back up into the premium for that move there. Make sense? Or did I just confuse you?
No, it makes sense. I was looking at it like I was still in the mindset of being bullish because of like overall, like we're at all-time highs, and like it just went down to, I think, about like around an order block. It almost got to it, I think. So I was still thinking bullish, but what you said makes sense. Like I have to keep in mind where we are.
I mean, you're not wrong. You're not wrong. You're not wrong for looking for. You're not wrong for looking for reasons to be bullish. You're absolutely right, because the higher time frame is bullish. It's just we just can't force it when we want it to happen. You see what I'm saying? We can't force it when we want. We can't just make it be bullish, because we say okay, it's bullish. We can't just make it just be bullish for us, right? Like even if, like I told you before, here you weren't wrong for looking for reasons to buy right there, right? You wasn't wrong. The only thing is you needed to give you a reason to buy once it come here, right? Once it came here, right? Notice, right? When we look here, once it came here, now, were you good on that part over there? Were you good on? Yeah. Were you that part when we were just talking about why this was a retracement? Yeah,
that's clear. Okay. Thank you.
All right. So when we coming in here, right, and price is dropping down, right? I think this where's our news? This is our news candle here. Okay, so this is our news candle right there, right? So let's look at price, right? This is our news candle, and then this is, let's do the same thing we did over there on the NQ. All right, come down here. 15-minute candles for a second. Well, we'll just go to 5-minute. We'll go to 5-minute candles, right? You watch the daily 1 hour and 5-minute, right?
Yeah.
All right, so we come over here to 9:30. All right, go from 9:30 over to 12. All right, 9:30 to 12. Okay. And then we'll go 12 to 1:30. Okay. 12 to 1:30. And then we'll go from 1:30 to 4. 1:30. All right. All right, so this is our New York session. All right, and then this is the breakaway gap right there. That's the breakaway gap. All right. Up, wrong thing. All right, that's our breakaway gap, and then this right here is the. You said this the one you was looking for price to trade off of. because you was looking for this range, right?
Yep.
All right. So, okay, now let's go down to 5-minute charts. All right, so on the 5-minute chart, all right, we'll come in. We don't need to see all that over there because we got our anticipatory reactionary points in screen. All right, so coming into 8:30, right? Our 8:30, we made relative equal highs right there. So that high is at 60.8750. The high on this candle right here is 60.8750, right? So we went up, made equal highs to the tick, not even relative, equal highs to the tick, right? So once we came up, we taken out the short-term buy side, right? Went above equilibrium, equal highs to the tick. Let's do this one thing real quick. Let me find these prices really quick. All right, so Wednesday at 2 p.m. 8, 11, 12. Okay, so that right there is our midnight open. Right there. Bag. Breakaway gap. All right. And then this right here. See, yeah. And that's the so that's 4. All right, new day opening gap. All right, just so I know what a 6 o'clock open is. All right. Okay, back on the 5-minute chart now. Okay, so 5-minute chart here, looking at 8:30. We went up, made equal highs, traded back above midnight, back above equilibrium. This is equilibrium here. Let's I can't put a name there, but I just put that as 0.5 so that we'll know. I just put that as 0.5 since I can't change the name. We just know that that's equilibrium. So we came back to equilibrium there. See if I can change this. Yeah, there you go. No. There you go. All right. Okay, so went above equilibrium, above the new day opening gap, set equal highs, and then we dropped down and took out the low, right? So here, right here, right, we had a Judas swing right there, right? So we got a bearish Judas swing there, all right? And then coming here into 9:30, right? We traded back up into there, then we dropped down, taking out the sell side, right? There's the, on the Judas swing, we took out the sell side, and now we hit our anticipated breakaway gap right there, okay? So now on the breakaway gap, we hit the breakaway gap, and then price, right, came up here above midnight, taking out that buy side, traded back down into here, into the imbalance, right, creating leaving 2 breakaway gaps there, Okay. We got 1, 2. Going on. Okay, so now we got 2 breakaway gaps there, come down, and then we trade back up, right? Tap the equal high, pull back down into the fair value gap, then we push up and take out the equal high, right? Then we pull back down, right? Then we push up, fail to take out the high, and then we break down, right? Taking out the low right here, and that's going into the getting ready to go into lunch, right? Coming into the London close there, getting ready to go into lunch. So here we've taken sell side, right, for the Judy swing there, right? So the Judy swing has taken sell side, then we came back up, got a bullish breaking market structure, retraced back down into the fair value gap, went up, took out the buy side, then we dropped down, failed to take out the buy side again, then we dropped all the way down, right, taking out sell side, create the inversion fair value gap there, right, moving into lunch, we trade back up, right, to midnight, fail to take out the buy side, right, we pull back down into the order block, push back up, right, take out the buy side there, and then we drop back down and take out the sell side, right? So in the midst of all of this right here, right, it's super high resistance day, right? Super high resistance day, but with the idea of getting long off of this, right? This right here was your only opportunity on this 5-minute time frame to get long, right? But the problem with it is, for me, the risk to reward isn't there, right? Because I'm entering here to go to that high, right? When I have this much risk below me, right? The low is all the way down here, and I got 2 fair value gaps below me, right? The reward, the high is only right there, right? So the risk to reward isn't there. So getting long off of here on this time frame there, going straight in as soon as it touch it, yielded the desire that you want. But waiting for confirmation on this time frame, this is all you got right there. That may be good enough for you. For me, you know what I'm saying, I be scalp McGee. Like, I took some scalps this morning on the NQ, right? I took scalps this morning NQ because I'm not looking to hold trades a long time during these conditions, right? So then coming back after this right there, for me, since we've taken out buy side, right, and we've come down and we've taken out this sell side, now I'll be looking lower, right here. Like, coming here at this point here, I'll be looking lower. I wouldn't be looking to go back up off of this right here. Why? Because we've already traded above the high. You see what I'm saying? We've already traded above the high right there. So I wouldn't be looking to go higher, since we like, if we hadn't touched that high, if we hadn't taken that high out, then I would still be, you know what I'm saying, wanting to see an opportunity to take that high out. But since that high has been taken out, then we came back and started to take out the sell side, then I would need it to show me that it wants to keep going up by coming up and taking this out and then giving me something to trade off of, right? It would need to show, but in the
you would still think that even though it just poked above it. I know usually, like, if it pokes like how it did, you anticipate it to go higher, right? Like, or deeper, dig deeper, I guess.
Yes, that's,
Or no?
but I
Okay.
would, if you see, if we had come down here and taken something out, right, and then poked above there, then I would be looking for it to dig deeper. But this, right, or if I'm glad you said that. I'm glad this is a teachable moment for everybody, right? You only want to like this poking above this. That's all it needs, because we're not going into a high per se. Like, we ain't going into like external liquidity. We're not breaking out of anything. You see what I'm saying? This is in the middle of the range. So all it need to do is just poke up there to take people out of positions. You see what I'm saying? But if we were trading, like, just say this right here, if it comes up and it pokes above that and starts to pull back, then I would want to see a deeper push up into it. Why? Because that's like the top of the top. That's what I mean when I be like, I want to see it run deeper into that liquidity pool. That's what I be talking about, because it's like the top of the range. It's at the external liquidity. Like, just poking below this right here, I would want to see it dig down into it, because it's the end of the range. But when we're in the mid, like, we got this consolidation down here. You see, we got all this consolidation here, then we go up and now we're reversing, right? I don't want it to dig up in here. I just want it to poke and keep going. Why? Because it's in a sell program, because we on the sell side of a sell model, and you don't want to see it digging into buy side. You just want to hit that buy side and get up off it. Hit that buy side and get up off it. When that's a signature of a sell program. It's respecting the premium PD arrays and pushing through the discount PD arrays. You
Okay, thank you. Yeah, so like major highs or external, like you said.
Yes,
that's when you're looking
like,
for it to dig
yeah.
deeper.
Like, if we're in like how this is in a sell model right here, right? If we came down here and just barely poked under there, I'd be like, I want to see it dig deeper in there, because we're completing a sell model, right? But since we're like in the middle of a sell model here, that little poke up there, I want to see that. I want to see it just poke and then come back down, because if we had completed the sell model and then we was going back up and poke there, then I'll be like, oh, okay, I want to see this dig deeper, right? Because it's like we're back on this side of a buy model now, and I want to see it rip through the buy side, right? When I'm in a buy model, I want to see it rip through the buy side. When I'm in a sell model, I want to see it poke the buy side and get up off it. You see what I'm saying?
Yeah, I do. Thank you.
Yeah, it's just like I say, we all, once we get married to our bias, right? It's like we start trying to force things on the market, and we like don't be wanting to see what's really happening, right? And it's one of the things where if you were in and out, buying here was good. Buy, now I'm out at the high. Even if you buy here, I'm out at the high. That would have been good for you, right? Somebody that was bearish, right? Selling over here, that was good for them. Sell, I'm out at that low, right? It was good for them, right? But it's all about, where is price? Where are we in price? What is price showing me at my key anticipatory reactionary points, right? And so just looking at the 5 minute here, right? Once we got there and went up, right? You see, it wasn't trying to push through. It started coming back down. That's why I said, once we made this move, I wouldn't have been looking to go long, because this is a very long way to come if you really want to push out there, right? This is signature of high resistance, right? Because at the end of the day, when you look at this right here and we come back up there, this is just a really, really deep retracement that happened to just take somebody out, right? It took out that data high right there, right? Why? Because price really never traded up there. That was just the news that manipulated up there. It wicked up there real quick. So it really was no trading above all of this right here, right? We really got no trading above that. That was just a quick news wick that went up there. So now price just traded all the way back up, then took out, right, all of this trend line liquidity, and then came back down. All right, just came back down. Let's look at a 60-minute chart right there inside that range, right there. So at 9 o'clock, we got a doji. Right, the 10 o'clock candle was when we wicked down, took out the sell side and pushed back up there. Then on the 11 o'clock candle, we ran out the buy side, and then we closed below consequent encroachment. Right, had a very deep retracement there. Okay, pushed back up, took out that hourly high above midnight again, came back down, closed below consequent encroachment again. And then in the afternoon, when we got smoother prices, we retraced back up into the range and then dropped down, right? It's a lot clearer on this 60-minute chart of what price was actually doing, right? It's a lot clearer on the 60-minute, right? But, you know, sometimes, like when we zoom in, sometimes the noise get a little loud and we miss it, right? A lot of noise get loud and miss it because this was our news candle. Right, that was our manipulation candle right there. 9 o'clock, totally indecision. Open and closed in the exact same spot. Right, 9 o'clock ain't told you nothing. Right, going into 10 o'clock. Right, which way did we go first? Let's see which way we went first at 10 o'clock. So coming into 10 o'clock, right here we went down first. Right, so at 10 o'clock, right, coming in at 10 o'clock, we dropped down. Swept out the sell side, pushed back up, right? Came close to the buy side, and then we came here, took out the buy side. Oh my goodness, I just saw this right there when I say we went down first. So, looking at these hourly candles, right? Since we came down first at 10 o'clock and took out the sell side, and then we turned back around immediately, coming up, right? And then as we moved into the 11 o'clock hour, we took out the buy side, and then we came all the way back down, right? So now, what have we just done right there, right? What signature is that?
The wig snatcher?
The wig snatcher, right? So if we come the right way, right, go the wrong way, take out liquidity, right? When we come back down the right way, what are we looking for? Our opportunity to retrace and participate in the move. It's ugly. It's ugly over here, but see here we came the right way, went the wrong way, took out the buy side, right? So now that high should be safe. Expand down, right? What do? We retrace back up into the range at lunchtime, right? And then after lunch, going into the afternoon time, we attack the buy side, and then we slide on off, right? More clean price action in the afternoon, right? But it's sloppy, it's ugly, but you can still see it playing out right there, right? That 10 o'clock candle went the right way first, came back up, right? Once we opened up over here at 11 o'clock right there, right? Then we went up and took out the buy side. So all we did was take sell side, take buy side, right? And now we're coming back in the right direction. We got our expansion down, right? What do? We traded back up. Where's your imbalance in this area? Where's your inefficiency in this area here, right? So we got buy side and sell side delivery there, right? And then we just go one way, right? So all of this is inefficient buy side. We come back up, offer that buy side all the way back up to that volume imbalance right there, right? So now we got that efficiently delivered, okay? We pull back down, right, in lunchtime, and then we come back up, right, boom, and then we take out, boom, that high right there. Once we take out that high right there, now we've attacked our opposing liquidity, and then we come back down here, go to that sell side there, and drop down a little bit more, coming down to the lower end of that breakaway gap that we was looking at. All right. So in high resistance, it's very difficult. It's very hard to sit there and watch it, especially when you're on the hard right edge and you don't know what's coming next, right? That's why I always say, you know, go back and study the price to see how it played out. See how it played out in low resistance conditions. See how it played out in high resistance conditions, right? And see, okay, when price is going through these conditions, are these signatures still there? If they still there, then you're like, okay, this stuff really do work. I just got to get better at seeing it and accepting, okay, this is what's going on now, right? Accepting this is even if you get chopped up in it, right? Let there be reward in the fact that you say, hey, right, this is what I anticipate price to do. And even if you get chopped up in it and it works out later, be like, okay, I was able to see that. Let me go back and see what I missed. What caused me to get chopped up, right? What caused me to get chopped up? And what, can I try? Even if you say, okay, we still ain't took this out, I'm not fighting the sales until we take that out, right? You want to see, okay, are we respecting this, right? If we get up in here and it push us back down, cool. But if we get up here and we blow through this, okay, let me see if this starts to support price. If it starts to support price, okay, if it support price, then we should come here, right? And then once we come there, then you say, okay, are we ready to attack that? Then it's going to have stuff over here that should support price, right? And then if it say, okay, I don't want to break through that, I'm just coming up here to wipe people out, right? I still want to go down there. You say, okay, I'll accept that. Let's see what it does, right? You don't sit there and be like, oh, I got to be right. I want to get on the internet and say I called this a week in advance. Screw that. We here to make money, right? Look at the signatures, see what price offering you, and then because at the end of the day, right? At the end of the day, when we come back up to this daily chart, right? What are we doing, right? This is the lowest area, right? This is the highest area right there, right? What are we doing in this range right there? Consolidating, right? Do we want to trade during consolidation?
No.
No.
Just wanted to play out.
Exactly. So, you know what I'm saying? So it's like you finding it difficult right now to anticipate what it's going to do. That's normal because we're just consolidating. When you're just consolidating, price is not really trying to give you any clear direction. You see what I'm saying? On the higher time frame, we just consolidating. So if the higher time frame just consolidating, imagine what the lower time frame gonna be. The lower time frame gonna be a bunch of back and forth. So, you know what I'm saying? That's why I say understand where you are in price, right? I've been scalp McGee. I've been scalping. I ain't been trying to get no 40, 50 point runs. If I can get me anywhere from 15 to 20 points, I'll be taking 10 points sometime. I'm scalping McGee. And that's on the NQ. 15 points on the NQ ain't nothing. You can move 15 points on the NQ before you bat your eye. I'm scalping McGee. I ain't got time to be trying to play out here in these streets, man. But again, you did a good job at analyzing the price and what price should do in this area. I just think I think what happened is when it didn't do exactly what you thought it should do, you started to doubt your analysis. But you didn't do anything wrong. You saw it the same way I would have seen it. It's just down there when you got down this area here. When you got down here, just have a little bit more patience here and letting it play out. Just have a little bit more patience and letting it play out, especially on days like today. Right? We had a large range day yesterday. We really shouldn't even be trying to force a whole lot during this morning session. And when you see the morning session, this is another thing that I do, right? I look at what price is done. Right, I see the Asian, right? The Asian session was in a tight range. We kind of sold off during London, right? And then if New York not giving me a sign that it want to continue or reverse, I anticipate the morning to be trash. And then I'll either wait till the afternoon or just wait till the next day, right? Because we've had a consolidation. We've had like an expansion. Right? If it ain't giving me something that it just really want to move and it starts hanging around, then I'm like, okay, I'm waiting till this afternoon or the next day. Right? Because like the New York mornings, that's when these are the U.S. indices. So that's when the bulk of U.S. traders are going to be involved. So this is when they really going to be trying to take the heads, right? This is when they really going to try to take the heads. So, you know what I'm saying? Remember, where are we in price? What has price done? And then make that decision. Do I want to try to engage? But again, good job at analyzing it. I think you did a good job. Just ran out of some patience right down here. Shout out Kashaya, man. Shout out Kashaya.
Thank
What
you,
else you
Tim.
got?
I did get a little like confused, or like you said, I had no patience because I thought I read it right, so I said let me ask. But I want to say I really appreciate your help, because I know I say it all the time, like, oh, the videos are great, they're helpful or whatever, but I feel like you're helping me get 1% better every day. So I really want to say that I appreciate your help
Hey, that's
and
what's up, man.
the
That's
detailed
what's
answers
up.
you give.
Hey, I'm just some dude from Fort Lauderdale, Florida, man. Y'all out here putting in the work. Y'all out here, you know what I'm saying, trying to make yourself better. You admitting when you need help. You admitting when you feel like, hey, I'm falling short, and you willing to work on yourself. I could talk to him blue in the face, but if you ain't willing to put in the work, what is you doing? You know what I'm saying? So, hey, I applaud you over and over again. I appreciate it. What else you got? They made you class president. They said they done took that title from Michelle, cause Michelle don't never be here. They say Kashaya is the class president.
I seen that. I appreciate it, and you know I'm repping for Canada, so I'll take that title. That's cool.
Hey,
Cool, man.
Bob's your uncle. Bob's your uncle.
Cool.
The heck with Fort
That's
Lauderdale. Running,
I
you better
never
watch your
heard that.
mouth, running. You say you never heard that.
I never heard that phrase before. My dad had to explain it to me. I was like, "What
Oh
is
man, you
Bob's
ain't
your
you
uncle?"
ain't you
Yeah,
ain't Canadian for real. You ain't
yeah.
Canadian for real. Get out of it, you fake Canadian. You fake
Gotcha.
Canadian. Talk some you don't know what Bob's your uncle is. Hey, running. Watch your mouth. Talk about Fort Lauderdale. Hey, you got anything else? Anybody else got anything else? Nobody got none? Orlando. Boy, stop. Oh, Mickey Mouse Town. Okay. That's it. Ain't nobody got now. Hopefully y'all got something out of this, man. I like when people pull up with hard-hitting questions, but I really like when people pull up with like a scenario that they were struggling with and be honest enough to say, hey man, help me with this. And I hope tonight proves to a lot of y'all, like I say it over and over and over. I say you see it. You just don't know that you seeing it. And you seeing it. But it's just like on days like this, price will make you doubt your own ability. It will make you doubt. I struggle with that right now to this day. I be like, man, what in the world? Now I know it make you doubt. Price will make you doubt your own ability. Why? Because we trying to engage with the market every day. We say, hey, I'm a day trader. I got to engage with this market. And I learned. What taught me? Losing money. Losing money taught me not to push that freaking button unless it makes sense to push that button. Right? And then I started thinking about it like this right here. I'm going to go full screen. Discord, y'all can't see my screen, but y'all can hear. I started thinking about it like this right here. And I got this. It's something that I heard my financial advisor say. Right? He said, if you can't explain to your customer why you put their money at risk, don't do it. And I said, that makes sense. So I was like, if I was doing this for somebody else, would I be able to explain to them why I pushed that button and lost that money? And if I'm just doing it off emotions, I couldn't. But if I'm pushing that button because my proven strategy that I've back tested, I've vetted, I've done everything, I know the numbers on it. If this thing says, if price does this, then it should do that, and I react here, if I get in, I got my proper risk management and I lose, and my customer come be like, hey, why did you I push the button because this is this. statistics on it. This is how much I lost there. This is how much I stood the game. If I can't explain that, then don't push the button. And I start treating it like that. So if I get ready to push that button, I got a reason for pushing that button. Hey, man, I appreciate y'all for hanging out with me. Again, we got 12 slots left in the boot camp, right? If you like interactions like this right here, the boot camp might be for you. If you're not in the gang, December the 14th is the last day you can use the 50% off. SPYDER50, Spider 50 to get 50% off. It'll be $500. Gang. Christmas is the last day you can use the 75% off code that's inside the announcement section. It'll be $250 if you're in the gang, right? Apex having an 80% off sale right now if you think you're ready, right? Y'all tell my son congratulations one more time. Defensive Player of the Year. Let me back this up so you can see the whole trophy. Defensive Player of the Year. I can't see it because y'all covering it up. I'll tell my son congratulations one more time. I'm a proud dad. Hey, man, y'all enjoy the rest of y'all evening. Tomorrow is Friday. Hey, if you had a green week, take tomorrow off, man. If you had a red week, take tomorrow off, man. If you ain't took no trades, take tomorrow off, man. One of the worst feelings as a trader is giving back your profits from the week on a Friday or going into the weekend in the red. So just take tomorrow off, man. Take tomorrow off. All right. Gang. Depending on how I'm feeling, we might have a pop-up tape reading session tomorrow. Depending on how I'm feeling. All right. I've been waking up in the middle of the night, so I've been getting out of the bed at 9:30. But depending on how I'm feeling, we might have a pop-up session tomorrow. Pop-up tape reading session. Y'all enjoy the rest of y'all night, man. I appreciate y'all. Y'all shout out Kashaya one more time. Kashaya, I'm proud of you. I'm proud of everybody, man, but Kashaya, I'm proud of you. Good job tonight. Hey, y'all enjoy the rest of y'all evening. Ain't no need to play the commercial. Y'all know what it is, man. Till the next time, I decided to get on Al Gore's internet and share my thoughts on this thing they call price action. Y'all be safe out here in these trading streets, man. Gone.